Hello everyone, this is Yagnesh Dalwadi. We are going to learn about debit and credit. I'm sure that you know the rules of debit and credit, but do you know exactly what is debit and what is credit? I mean, do you know the meaning of debit and meaning of credit? If yes, check your knowledge. Let's start. Now give me some answer, right? I'm going to ask some questions. Number 1, debit is bad and credit is good. Correct or false? Right or wrong? This is question number 1. Second question, debit means minus and credit means plus. Do you agree with this? Think and remember your answer. Now, not at all. Debit means minus and credit means plus. It is not there. This debit and credit comes because we follow double entry bookkeeping system, wherein every financial transactions have at least two equal effects, one debit and another credit. Suppose any transactions we are debiting some amount, for example 1000 rupees, so we have to credit 1000 rupees, right? So it reflects the double-sided nature of any financial transactions. It's a duality. Because of duality, it's a debit and credit. It's not good, not bad, not plus, not minus. Now some says left hand side of an account is debit and some says right hand side of account is credit. This is partially true. When we prepare any account, right, account, for example cash account, this side is called debit and this side is called credit, right? This is partially true, but what exactly debit and credit is? So let me define the credit first. Credit represent the source of money, from where your money comes from. So your money comes from capital. You take liabilities, means you take a bank loan and loan from other financial institutions, or you have some income, you have generated some income comes from whatever you have, income minus expenses, whatever the revenue comes, right, is a revenue, right? So credit represents the source. So it's include capital, liability and income. Similarly, debit represent the destination where you have used the money. It's either you have purchased assets, or you may have made an expense, or you may have provide or distributed these funds amongst the owner, right? So debit represent the destinations. Now, so finally debit is all assets, expenses and dividends, and credits all capital, liabilities and income. So how these rules of debit and credit comes from? Whenever this increase, for example asset, expense and dividends, whenever it increase we have to debit, and whenever it decrease we have to credit. For example, suppose you have purchased machinery, you have purchased machinery. So machinery account, machinery is an asset, so machinery account you need to debit. So whenever these three increases we have to debit, and whenever this is decreasing, this amount is decreasing, we have to credit. Similarly, whenever this capital, liability and incomes are increasing, we have to credit, and whenever it decreases we have to debit. This is how the rules of debit and credit are created. Thank you so much for watching till the end. Thank you so much.